Hi, Cousin Marv Eisen here. We're looking at the E-mini chart, a 3-minute chart, on the day of June 14th. Starting here during the regular trading hours of 9:30 and extending to 4 o'clock Eastern Time. We're looking to find the best places of taking trades where the opportunities are lowest risk and highest probability of reward. Let's start back at the beginning of the morning of June 19th and rerun this chart to see where those opportunities exist. Okay, so here we are, 9:30, the morning of June 14th, and the market opens with a strong move to the downside. And in the morning, the first few minutes of the morning session, it's like the fog of war. The market makes a momentum move, an impulse move in a particular direction, and without any rationale, you can jump on and make yourself a quick profit. And that's always a good idea because early in the morning, the market makes a strong move in one direction. Typically, that's a good place to jump on. If you did that in the morning of June 14th, you could have picked up about 6 to 8 points right over here, starting at 9:30. You would have jumped in at 9:30, seen the action from the previous 3-minute candle just before the market opened. If you jumped on to the downside, would have been fine. Could have picked up, let's say, if you got on at 28.92 and got off at this candle at the 936 area, 28.86, could have picked up 6 points over here. And that would have been an area to hop off because the stochastics was bottoming out here as well. The rest of the, from the next, almost half an hour, till about 9:50, there was a consolidation. There was whipsaw movements over here. No real signals to jump on until we get over here at 9:54. Just 9:54, we see this strong move up in almost hammer. And we could have jumped on here, but it would have been a false signal because, as you can see, the next candle did not confirm. Might have been saying we're at a low level. This candle indicated if you went positive here, this candle right here at 9:57 indicated that you were wrong. You could have lost a couple of bucks, probably not much because the move wasn't radical, it just wasn't a confirming candle. So you would still, if you did this early morning impulse, if you hopped on over here, you had 6 points, maybe gave back 2 points over here. During the rest of the morning, we get to an area of consolidation where there are a couple of dojis right here, 10.15. After that, the stochastics goes down to the bottom, and of course here we're looking at a reversal, and here we can find it over here in a reverse hammer right here. We see a reversal here in this reverse hammer corresponding to the low stochastics, and the psychology of this move over here is that there's indecision at this candle at 10:30 with a further move down here, but the next candle, 10:36, the bulls start to come in and move the market up to 28.88. Even though the bears knocked them down, this would have been an indication to jump on, and take a trade up here till 28.91 and pick up another 4 or 5 points. So that could have been an area of low risk, high probability of putting on that trade. At 10:54, probably was after your trading morning ended. So you might not have been trading over here, but we can see this area here. It's not a shooting star, but we see it matched the high of the day right here, or just about matched the high of the day at 9:30. And with a short move up, but it ended down below the 10:48 candle, and this could have been an area to jump on, particularly since it corresponded with a stochastics at a high. And if you rode that down to the low of the stochastics and got off, you would have picked up another 5-6 points. And if you did, good for you. Then, and you weren't trading here, I know, because it's at 11 o'clock, 11:15 at this area where my cursor is. Right over here, do you see this? You see these two candles here? This is a piercing pattern. This green candle, this is a piercing pattern. It opens up below the close of the previous candle and proceeds up toward more than halfway up the previous candle. And this would have been a really good spot to take a trade to the upside and pick up another 5 points. And we could have gotten off here because at this signal, if you were trading in this at this time of day, this signal here also corresponded to the high over here. And we probably should have, if we noticed it, we would have recognized it and gotten off here. So that would have been the end of your morning if you traded to that extent. Let's move it over to the afternoon period at 3 o'clock. Here we are, 3 o'clock, 1500. The market has been floating up most of the afternoon, and it continued to go up with the stochastics really whipsawing back and forth, up and down. Right here at this doji, you might have taken this as an area to get out. And if you did, you could have picked up a few points here, but this candle would have taken you out. And you would have given back your gains if you held on. For the rest of the trading day, I don't see any further entries. Now, remember, when you're trading, you only need one entry, one good entry to make your money for the day. You don't need any more than that. So with the signals that we've gotten here, if we hopped on to this early morning fog of war move and gave back a little over here with this hammer, and then got on here, got off, and then got back on here to the reverse side, that would have been more than enough to make good money for the day of June 14th. Anyway, that's my call for the June 14th E-mini chart, and I hope this helps you guys out. If you don't know, if you're watching this for the first time, my name is Marv Eisen. If you're looking for a way to make money and you've lost your job, or you are close to retirement or in retirement and you need a way to make money, try my course, Trading Mastery for Financial Freedom. Anyway, this is Marv Eisen for Timeless Dollar, and I'll see you in my next video. Thanks for watching.